Hello. Hi all, and welcome to another edition of TraderCast YouTube live trading, key trading levels, and daily trading setups for popular markets. My name is Phil. I'll be your presenter today. A little bit about me, for those of you who are watching this for the first time. If you're looking for a community of traders where I would be doing what I'm doing today, but in a longer sessions and explaining the setups in more details, talking about the key economic data releases, fundamentals, and also technicals, when we have a live breaking news as well. Check out TraderCast.com. If you're brand new and you're just looking to learn how to trade, you can find my courses at mytradingskills.com. Over the past 10 years, I had the privilege of presenting in front of various different industry events for various different brokers, and I had the privilege of teaching many people how to trade. Some of them were brand new, and they were looking for early steps or beginning to trade type education. Some of them were intermediate and more experienced, and they needed help with a specific area of their trading to achieve consistency, maybe risk management, maybe psychology, and so on. So if you need any of those, let me know. Big disclaimer, I'll be showing you some live events. I was talking about starting live events soon, but some live trades. These are my opinions and experiences only. This is not advice. I do not have the feel for your personal investment and trading objective, but basically what I'm trying to do here is I'm trying to show you a very basic approach to trading. This is a practical application of what I think beginner trader should be able to do, and I'm just putting it in real terms, basically looking at the live markets. Now, some of the positions which I currently have open, or basically I only have a half of one position open. But yesterday I was long dollar yen, and I closed that at 114.50. Also, if you watched yesterday's session, you knew that I was looking for a scalp type setup in sterling dollar at 136.01. That's unfortunately closed. Well, unfortunately, it didn't reach the ultimate take profit level, but I've closed it at 136.35 on the retracement. Basically, it did not break through. I'll show you this a little bit later. Through previous swing highs, it didn't carry on higher, but I've closed it. I was also long FTSE or UK 100 from 75.25, and I closed half of my position at the current swing high at 76.30. 76.28 was actually the level where I got filled, so I still have half of that position open. I had a couple of other small positions open in US equities. I was scalping S&P and also Nasdaq, but they were such a short-term time frame. They were when the US markets open for the first 60 minutes, I got stopped out on both of them, so they're not even worth putting in here, but that's what I did as well. So I got stopped out on two long setups in S&P and also Nasdaq, but I'm looking at some new levels for those markets right now. I'll talk to you about all of that. So the first things first, let me just show you my open trade and explain the reasoning behind it. And this setup was actually triggered on limit order. So for those of you who watched these sessions over the past week, you knew that I was looking at this particular level for FTSE, and partial profit taking was at this swing high here from 18th of January, 76.30 or 76, as close to 76.30 as possible. But from the trend point of view, this is nicely uptrending market, and I saw this as a corrective pullback in the same way as we had one here, here, and here. So as long as this trend carries on, I'm happy to be looking to buy FTSE. So this position was 10 contracts, and my stop loss was initially below entry, closer at entry, and now it's above entry. I still have a limit order up here. I'll show you where I am with that. I still have this limit order at 76.75. That's there just as a guidance, but I would be probably looking to take profits as I go along. So what I want to do with this particular trade, I want to move my stop loss slightly higher to lock in a little bit more profits in here. So 75.56, about 31 points away from where I got in, and I'm locking in this just in the case if I see a push lower and a dip lower. I want to get out. I was actually setting up another FTSE trade to go long at 75.50, and I'll talk to you about all of that in more detail, but let's see how this works out. And if I get stopped out in this one, I might re-enter again at another position. Okay, so that's where I am with the open positions. A couple of things that I'm looking at today. I won't be talking about economic data releases. I won't be talking about fundamentals. I won't be talking about other things. But I'll talk to you about Dow, S&P, FTSE. There's a dollar CAD setup which is lining up quite nicely. Set up in crude oil and also in gold. Now, the first things first, let me just show you the FTSE setup that I'm looking at the moment. This is FTSE in 4 hourly, so uptrending market. This appears to be a cluster of the consolidation in the past. We are currently breaking out, testing these previous highs and correcting. And what I would likely be looking to do is I would be looking for a potential gradual pullback lower towards 75.50, and then I would be looking to find a reversal setup, either a hammer like this or a bullish engulfing or a morning star reversal candle or something here, tweezers, for another leg higher. If I decide to get in, I would likely put my stop loss at 75.30, which is about 20 points of risk. And if I do get in this trade, so this would be the amount of risk, I would be looking for this amount of potential reward. So from the risk to reward ratio point of view, we have 1, 2, 3.5, so almost 3.5 to 1 risk to reward ratio, disproportionate amount of potential gain for a definite amount of risk taken on this position. I'm happy with that. So I'll pay attention, and if that happens and if it's triggered, I will likely react to that. This would be a swing type trade which could be open for a number of hours, days, possibly even a week. The other thing that I'm paying attention to at the moment is S&P, and let me show you where I am with S&P. This is also a 4 hourly time frame for S&P. We are seeing that there's a bit of a selling pressure. For those of you who watched the broadcast yesterday, you remember I was looking for a rally and then possibly a breakout above this trend line here. Instead, what happened is previous support retested as a newly found resistance, and we had a sell-off. So that was the alternative view. So I was buying this. Looking for a breakout higher, and I got stopped out. But as I said, these are scalp type trades. These are not swing and intraday swing positions which could be open for a number of hours, and you can talk about them. This is position that could be open for a number of seconds, minutes, an hour max if I'm lucky, and then you get out of it. So I'm looking for another setup here in S&P. This could be a swing type trade. It could be intraday trade. I'll decide what to do, but basically what I'm looking at is I'm seeing this as a little flag continuation pattern. The trend is to the downside, and this type of flag patterns, they have the tendency to break to the downside. And what they do is you see a break to the downside like this, and then you see a little retest like that. Okay, so you see loss of support, retest, and then you see another leg lower, and that another leg lower tends to be measured in the previous consolidation breakout. So there was a previous, so support, 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 retest, newly found resistance. So this is the number of points to the downside. Extended gives us this zone here, which is where I would likely be looking to find a reversal for a bounce higher. So the level that I'm paying attention to on S&P is at 4,500, 4500. And if that happens, so if we do get this type of pullback and then a nice reversal, I would likely be looking for a confirmation to get in, and my stop would be at 44.70, so it's about 30 points in risk for the potential take profit up here at 45.90, 4,600, 46.15 to the upside, and yet again a disproportionate amount of potential gain for a much smaller and a definite amount of risk that I would be willing to take on this trade. So that's where I am with S&P. I don't have that as an order at the moment. I will be reacting to that manually, or at market as it's known, rather than having a pending order. Now the other thing that I would be paying attention to is Dow Jones. I'm trying to do this very fast because there's loads to cover. Maybe I'm covering too many. I know I was speaking to a few members who said, oh, maybe we should just do one trade a day, and one trade a day is great, but you know, it might not happen. So I'm just trying to basically cater for people who trade various different things and try and give you the indication of what I would be looking at as well. So this is Dow Jones. Dow Jones setup looks like this. So Dow Jones is still uptrending here, supported by this rising trend line. We have a previous consolidation, previous all-time high, breakout, retest, retest, retest as a support, and then retest, retest as a resistance. So really key level here is at 34,750. So what I would be looking to do is I would be looking to see if we can get a pullback to that level at the open. So that can happen in two different ways. It can happen either by a kind of a rally. Sorry, I should be painting this a different color. So it should be a rally like this at the open, and then a sell-off in the afternoon, and then here happens a reversal. Or we see a sell-off from the get-go, from the open, which is in about 45 minutes or so from now, and then a rally from there. So I would likely be looking to find the reason to go long here. This is counter trend from the short-term intraday position, but with the trend from the longer-term point of view. 34,750. Stop would be at 34,530, 34,540, thereabout. So it's a wide stop in number of points, and then I would be looking for a potential limit order or a take profit at 35,340, which brings us to yet again that disproportionate amount of potential gain for the definite and much smaller amount of risk taken. Happy with that. I don't have a pending order on this. I would likely be looking to react to this outright. I wait for the market to come to a certain level, read the candles probably in 15-minute or 5-minute time frame, and decide if I want to get in. In that case, it'll give me the sharpest entry, and if I get that, I will likely do that as well. The other thing that I was looking at from the commodities point of view, I'll talk about gold very quickly, and then also crude oil, and then I'll talk to you about dollar CAD as well. So gold, this appears to be nice and bullish. This is a very significant level of resistance before, and now because it's broken, it's going to be newly found support. Yet again, if you don't know what resistance and support is, really don't be afraid. It's a reference that traders use. You can find a course on My Trading Skills explaining how to trade support and resistance, but basically resistance is the ceiling, which is possibly preventing the price from going higher, and support is nothing more than a floor that's preventing the price from falling further. It doesn't mean that they'll stop the price moving through them, but it's a reference point that loads of other traders are paying attention to, and it's almost like a self-fulfilling prophecy because they tend to react to these levels, and that's all it is. Okay, so what I'm looking for in gold is I'm looking for a possible pullback to 1830, and then a nice reversal from there higher, therefore continuation of this trend towards 1860, 1865, 1875 on the upside. If I do decide to get in at 1830, 1831, I would likely have my stop loss at 1820. So I would risk about $10 in price. So this $10 in price could be 10 points, or it could be 100 points, depending on who your broker is, how much leverage you take, what type of contract you trade, what type of a product you trade. Are you trading futures? Are you trading derivatives like CFDs? Are you spreading? Are you trading options? I don't know, whatever you do. But that's the risk. So the price, 1830 entry for me, and if I see a reversal, stop would be at 1820. So $10 in price of risk for a potential move higher through 1845, 1850, 1865, 66, and then 1875 on the upside. So that's gold. It's not triggered just yet, and yet again, this could take a while to happen, if it is to happen. The other thing that I was talking to you about, because I got a few requests on crude oil. We talked about crude oil a lot. Nice and bullish breakout. Crude oil is coming to some significant levels of resistance here towards this 87, 88 area. So what I would be looking for to do is to follow the trend. So the trend is fairly straightforward. So there is my trend here. That's the trend. It's going higher, higher low, higher low, higher low, higher low, higher low. As long as I see higher lows, I would be a buyer. So what I'm looking for is I'm looking for a pullback towards 83, and then I'm looking for a reversal that could look like a combination of these candles or combination of these three candles. This is called morning star reversal. I would be looking for a bullish hammer if it doesn't have a wick. I would be looking for a bullish engulfing, which looks like that, to happen here, and if that happens, then I will put my stop loss at 81.70, quite likely. Therefore I'm risking about 130, 140 points of risk, depending how you get in, where you get in, what the confirmation is, and then I will be looking for a push higher, therefore continuation to the upside, and take profit towards 88. Disproportionate amount of potential reward for the risk taken. Happy with this setup. 83 key trading level, point of entry if I get there, and if I get the reversal, stop at 81.70, take profit 88 for me for crude oil. Now the last thing that I want to talk to you about before I finish, and this was fast and furious, we covered a lot today. Hopefully the sound is all working, because yesterday I had an issue with the microphone. For some reason it just it didn't work. But the last thing I want to talk to you about from the currencies point of view, there's a nice setup in euro dollar, there's a nice setup in sterling dollar. Dollar yen is coming to a good level again, but I won't be covering those. I'll be covering those in TraderCast as soon as I finish with you here. I'm going to TraderCast. We are starting our afternoon broadcast. I'm looking at dollar CAD, and although I am bullish US dollar, because of that push higher in crude oil and correlation between crude oil and Canadian dollar, you often see a volatility which is kind of interlinked. So setup for dollar CAD for me at the moment would be something like this. You can see that there is an energy buildup. There is an energy buildup here, and this type of energy buildups, they have the tendency to have explosive reaction. There's a coiling, and then boom, it explodes, because bulls and bears are exchanging their trades and nobody's winning at the moment, and energy is building up. So a couple of things that could possibly happen is something like this. I would like to see a rally from this oversold market conditions into one spot 25.55, one spot 25.50, and then I would like to see a sell-off further towards 124. If that's the case, I would likely be putting my stop loss higher towards 126, 126.20. So it could be 50 to 70 points of potential risk for 150, 160 points of potential gain to the downside. So 2-to-1 risk to reward ratio, not the greatest one, but that's where I am with dollar CAD at the moment. So key trading level for me would be at this area here, 125 55, 125 60 or thereabouts. So that's where I am with the dollar CAD. It was lovely talking to you all. I've covered a lot actually today, so hopefully you found this informative and beneficial. I know some people are joining us late, so just to give you the idea of where I am with my open positions, this is from yesterday. I've closed my dollar yen at 114.50. It did not break out higher through 115. There was a bit of a reversal. US dollar weakening. Sterling dollar, I closed it at 136.35. Yet again, that was the intraday position. Anyway, I was looking for more upside, but it didn't happen. Eventually started reversing. I thought, okay, fine, time to get out. And I've closed half of my long position on FTSE at 76.28, which is the retest of that previous swing high, i.e. the spike that we had recently, and the retest of the resistance. So it's quite normal for some profit taking to happen at that level. So I took half of my position and left the other half position running. Thank you for watching. Thank you for listening. Stay safe, happy trading, and bye for now. I'm going to TraderCast now. We are starting our afternoon session, and I'll be back with you tomorrow. Thanks. Bye.